Welcome to K&L Gates Working Wise podcast series. My name is Bryan Cantrell, and I'm an associate in the Newark, New Jersey office of the firm's Labor, Employment, and Workplace Safety Practice Area. In this podcast, I will discuss the white-collar exemptions to the overtime requirements of the Federal Fair Labor Standards Act. First, I'll give a brief overview of the overtime requirements of the FLSA and the white-collar exemptions to the overtime requirements. Then I will summarize the Department of Labor's efforts to revise the overtime exemption since 2016, including the current state of the changes to the exemptions. Finally, I will provide some tips for ensuring compliance with the current regulations and preparing for the anticipated upcoming changes. The Fair Labor Standards Act of 1938, or FLSA, is the primary federal law that regulates the wages and hours of employees in the United States. It sets a minimum wage, which is currently $7.25. More importantly, for purposes of this podcast, it requires employers to pay employees overtime in the amount of 1 1/2 times the employee's regular rate for all hours worked over 40 in a given work week. The overtime pay requirements also introduce certain administrative requirements, such as employees' timekeeping and other record-keeping requirements. Please note that most states have their own wage and hour laws, some of which closely mirror the FLSA, while others apply significantly more burdensome minimum wage and/or overtime requirements. The FLSA sets minimum benefits for employees and does not supersede state laws that provide greater requirements for employers. This episode is limited to discussing the requirements of the FLSA, but always confirm your state and local laws before enacting or changing any wage or hour policies. The FLSA applies to almost all employees of almost all employers in the United States, though under certain narrow circumstances, some employees may not be covered. If you are unsure whether your company or any of your employees are covered by the FLSA, you should consult counsel to confirm. Under the FLSA, you must start from the assumption that all of your employees are entitled to overtime, then consider whether any of the exemptions to overtime apply. In other words, you should never assume that an employee is exempt from overtime, no matter what position the employee holds or how much the employee is paid. An employee must meet very specific criteria to be exempt from overtime. There are several exemptions to the overtime requirements of the FLSA, including executive, administrative, professional, outside salespeople, computer professionals, drivers helpers, loaders, mechanics, farm workers, etc. However, for purposes of this podcast, I will focus on the 3 most common exemptions: the executive, administrative, and professional exemptions. Collectively, these exemptions are commonly called the white-collar exemptions. All 3 white-collar exemptions require 3 things for an employee to be properly classified as exempt from overtime. First, the employee must be paid on a salary basis. Second, the employee must be paid a certain minimum salary. Finally, the employee must have certain job duties. Let's address each of these requirements in turn. First, the employee must be paid on a salary basis. Being paid on a salary basis is a matter of how the employee is paid, not how much. An employee is paid on a salary basis if he or she regularly receives a predetermined amount of compensation for each pay period. The employee's compensation cannot be reduced due to variations in quality or quantity of work. The employee must be paid his or her full salary for any work week in which he or she performs any work, and there cannot be any deductions if the employee is ready, willing, and able to work. For example, for an employee to be paid on a salary basis, an employer cannot deduct pay from an employee for a day when the employer's office is closed due to inclement weather. Employers are allowed to dock pay from salaried employees without disturbing their status as being paid on a salary basis under certain narrow circumstances, such as when the employee misses 1 or more full days for personal reasons other than sickness or disability. However, employers must be very careful about docking the pay of exempt salaried employees. Doing so improperly can cause all of the employees in the same position under the same manager to lose their overtime exemption for the work week in which the improper deduction is taken. Employers should also have a safe harbor provision in their handbooks or other policies to help protect against unintentionally losing exempt status for employees due to payroll errors. Second, employees classified as exempt executives, administrators, or professionals must be paid a certain minimum amount to qualify for the exemption. That amount is currently $455 per week, which works out to approximately $23,660 per year. Finally, an employee who is classified as exempt as an executive, administrator, or professional must meet certain specific job duty requirements set forth in the federal regulations. First, for an employee to qualify as an exempt executive, his or her primary duty must be the management of the enterprise or a customarily recognized department or subdivision of the enterprise. Additionally, an exempt executive must customarily and regularly direct the work of 2 or more full-time equivalents, and the executive must either have the authority to hire or fire or give suggestions and recommendations about hiring, firing, advancement, promotion, or other change of status if those suggestions or recommendations are given particular weight. Second, for an employee to qualify as an exempt administrator, his or her primary duty must be the performance of office or non-manual work directly related to the management or general business operations of the company or its customers. Critically, the primary duty must also include the exercise of discretion and independent judgment with respect to matters of significance. Examples of administrative duties include, but are not limited to, tax, finance, accounting, budgeting, auditing, insurance, quality control, purchasing, marketing, safety and health, human resources, labor relations, and legal and regulatory compliance. However, bear in mind that these tasks must include the exercise of discretion and independent judgment. They can't be clerical or secretarial tasks, or other tasks that involve applying well-established techniques, procedures, or specific standards described in manuals or other sources, such as data entry. For an employee to qualify as an exempt professional, his or her primary duty must be the performance of work requiring advanced knowledge in a field of science or learning customarily acquired by a prolonged course of specialized intellectual instruction. Examples include doctors, lawyers, teachers, accountants, pharmacists, chemists, architects, and engineers. The white-collar exemption regulations have been revised many times in the 80 years since the statute was enacted. The regulations that are currently in effect were enacted in 2004. However, in 2014, then-President Obama directed the Secretary of Labor to update the white-collar exemptions, which, in the administration's opinion, had not kept up with our modern economy. The Department of Labor issued a proposed rule, and after considering public comments, issued a final rule in May of 2016. The final rule was to go into effect on December 1, 2016. The 2016 final rule did not change the salary basis or duties requirements for the white-collar exemptions. However, it did significantly increase the minimum salary requirements for those exemptions. The minimum went from $455 per work week to $913, which is more than double. At $913 per work week, an employee would be earning $47,476 annually, compared to the previous minimum of $23,660 annually. The 2016 rule also created an automatic update mechanism that would adjust the minimum salary level every 3 years without any need for action by the Department of Labor. However, before the 2016 final rule went into effect, several states and business associations sued the Department of Labor challenging the rule. On November 22, 2016, less than 10 days before the 2016 rule was to go into effect, a federal judge in Texas issued a preliminary injunction blocking the 2016 rule from going into effect anywhere in the United States. The Department of Labor, then still under the Obama administration, appealed that ruling to the U.S. Court of Appeals for the Fifth Circuit. On August 31, 2017, the same federal judge in Texas issued a final judgment blocking the 2016 rule from going into effect. Shortly thereafter, the Department of Labor, now under the Trump administration, withdrew its appeal of the judge's initial injunction against the 2016 rule, but later filed an appeal of the final judgment blocking the 2016 rule. However, the Court of Appeals has granted a request by the Department of Labor to hold the appeal in abeyance pending the issuance of new regulations. As a result, The 2016 rule has been completely blocked, and the 2004 rules remain in effect. The Department of Labor has not yet published a proposed rule, but it is widely expected that the new rule will increase the salary minimum required for the white-collar exemptions. However, the salary increase is expected to be much more modest. Alexander Acosta, the Secretary of the Department of Labor, stated during his confirmation hearings in March that he believes the correct threshold should be around $33,000, which is roughly a 40% increase over the current salary minimums. However, it remains to be seen whether the Department of Labor will revise the white-collar exemption regulations. If the Department of Labor increases the salary minimum as expected, employers will have to review their employees' exempt pay rates. For any employees classified as exempt under the white-collar exemptions who do not make the new minimum, employers will have two options: either reclassify those employees as not exempt and pay them overtime, or increase their salaries to ensure they meet the new minimum. Regardless of whether the salary minimum is changed, employers must remain vigilant about proper overtime classifications. Misclassifying employees as exempt from overtime is a costly mistake, and the law allows large groups of employees to join together easily in a collective action lawsuit to recover unpaid overtime they allegedly were entitled to receive. If you have not recently undertaken a thorough audit of your overtime classifications, we strongly recommend that you do so to help avoid significant potential liability and legal costs going forward. It is particularly important to review whether employees classified as exempt meet the job duties requirements for the executive, administrative, and/or professional exemptions. Employers must consider what employees' actual primary duties are, not simply what their job descriptions say their primary duties are. When in doubt, it is always advisable to retain competent counsel to advise whether your overtime classifications are a potential source of liability. We hope you've enjoyed this episode of K&L Gates Working Wise podcast series. More episodes in our series can be found at klgateshub.com, and you can learn more about our labor, employment, and workplace safety practice area on our main website, knlgates.com. Thank you for joining us.